Hello investors, today we'll speak about my favorite three ARK Invest stocks. It's Katie Wood ETF. Today I will tell you and we will analyze three most my favorite ARK Invest stocks. Let's start with the ARK Invest ETF. We can see that its performance year to date is more than 50%, and also by the RSI indicator we can see it's a weekly chart that now it's heavily oversold. Also there is a support level here, so as I see from here we can see a very nice bounce. And let's start with the first stock for today. It will be Zoom. Actually Zoom is in my top 5 holdings in my personal portfolio. If we look to the chart, we can see that there is some kind of support level, and now if we will break it, of course we can be traded much higher. Last year Zoom already traded about 400 bucks, but now it's only 150. So from here I can see a huge potential to show a very good performance, and of course there is a good probability to see high bounce from this point. Also the RSI indicator, we can see that in the weekly chart we very oversold. Actually in the past we never been so in such oversold position. I'm personally of course use this software, I use this application for communicating with people, so for me as a user, yeah, Zoom it's a very nice company. And let's have a look on Zoom fundamental indicators. Its total score is 72. It's relatively high score. Regarding the financial stability, we can see that the company don't have debt at all. The debt to EBITDA ratio is very low. Also we can see that interest coverage is huge amount, and of course the ultimate Z score is 11. So this indicator tells us that this company for sure ain't going to bankruptcy in the future years. If we're looking at the profitability, we can see that the gross margin is very high. It's 75%, and net margin of course also very high, about 30%. It in the same range like Google, like Apple, like Facebook. So very nice and very high profitability of this company. This company growth rate also very high, and we can see that 3-year revenue growth rate is more than 100%. EBITDA growth rate also 300%. It's very unbelievable figures. But of course it's also related to COVID period, when most of us were sitting at home, and of course we very actively used such programs like Zoom. And regarding its future, we can see that 3-5 year CPS will be in the range of 7%, and future revenue growth also will be higher than 10%. So as for me, it's a very nice figures. So of course analysts and investors expecting Zoom to show a high growth in the future years. And current value of Zoom is not so cheap, even after correction more than 70%. We can see that PE ratio is 27, and PS ratio is 8. So it's not a cheap stock, but as for me, when we have such a nice forecast of growth, and also after such significant correction, and the company has no problems with that, so nice, I find a very good opportunity to buy this stock. The next stock is Roku. Please have a look also on the RSI. Now it's oversold. It's now at 35. It's current number. So as I see, we have a resistance level at 173. Roku, it's also a stock after tough correction. We can see that from its high values it down more than 80%. So in my opinion, I think that now these current levels, it's not bad price to buy the stock. Let's have a look on Roku fundamentals. Its total score is about the same level as Zoom. Regarding the financial stability, we can see that debt to EBITDA ratio is less than 3, but the cash to debt ratio is about 4. So I don't see any difficulty with that, because also we can see that interest coverage very high at more than 40 times. Regarding the profitability, the gross margin is about 50%, but net margin it is much lower than Zoom, only 5%, but still it's a profitable company. And about the growth, we can see that revenue is growing, the EPS also growing, and for the future years there is a focus, yes, that the revenue will grow with nice more than 30% per year. But as for value, for now we can see that it's very expensive. Yeah, it's not cheap. We can see PE ratio about 100, and PS ratio also very high. The price to book value is also very high. But of course also we should consider the technical analysis, yes, and the chart telling us that after so tough correction, more than 80%, it can be a nice bounce from this point, from this level. So as for me, Roku, it's the second stocks that now I'm buying from ARK ETFs. And the last stock for today is Spotify. From the chart we can see also very strong and very tough correction from this its high level. The correction is more than 70%. Also we can see some kind of triple bottom here, so I think that the current levels, it's a very nice position to now buy the stock. Also the horizontal volumes can tell us here that there is a huge cluster in the level of 146, so I think that's a possibility at least more than 20% to bounce right from this level. And regarding the fundamentals of this company, its financial stability, we can see that it's the most dangerous stock for today. Its interest coverage is not so high, and the debt to EBITDA is more than 3. More than 3, it's not so convenient because many banks, leasing companies, for them, when they see ratio 3 or 4, sometimes it's difficult to raise money. So of course we can check the balance sheet, its quarter report, but as for now I think it's not necessary, because Altman, the score, we can see that it's is now more than 3, and the cash ratio, cash to EBITDA, is more than 2. So as for now, I don't see huge problems with that, but of course we can see the dynamics and see that this situation is not worsened. Regarding the profitability, not so high profitability, gross only 26, and the operating margin and net margin and also is less than 1%, but still it's a profitable company, and its value measures is also quite modest. Of course, when we analyzing Spotify, firstly we can see and check the chart, and this chart is for me, I see it's, of course, it's strong buy. So now from this level I load this stock on my boat. And before I forget, let's have a look on the top Katie Wood stocks. It's top 25 ARKK Invest holding. We can see that it's the most heaviest position in this ETF, about 10%. Zoom, also Roku is the second one. We can see here also Tesla, Block, Coinbase, Twilio, and here also position about 3% of Spotify. So finally speaking, I think that now it's a good opportunity to buy ARK Invest stocks, Katie Wood stocks. There are so many oversold stocks, and today I told you about three stocks from my personal portfolio. So if you like this channel, this video, so press the subscribe button and see you on the next time.